Hey guys! In this video we're looking at how to solve for net accounts receivable when the information you receive is a little bit more involved. I recommend pausing the video here to try to attempt this question yourself, and then once you're ready to look at the answer to go ahead and unpause and watch the rest of this video. So I'll let you pause now. Alright, and welcome back. So when I'm first approaching this question, what I like to do is to just kind of summarize all the information I have. So Winston Enterprises is in their first year of operations, which is important because it means all of our beginning balances will be zero. They also had inventory purchases that were equal to $950,000. Ending inventory was $270,000, and then later in the information it tells you that there were no write-offs of inventory. Next, the information given is that all sales were on credit, and that its markup on cost is 50%, which means that its retail price is 50% above the cost of inventory. So when you're calculating your revenue, you would multiply your cost of goods sold times 1.5. Next, the question tells you that Winston Enterprises recognized $100,000 of bad debt expense, and that they wrote off specific accounts worth $50,000. Okay, and really the very last piece of information they give is that cash collections for that first year equal $710,000. And the goal of this question is to find the ending balance of your net accounts receivables in year one. Remember, net AR is your balance in your accounts receivable minus your balance in your AFTA account. Now that I've summarized all the relevant information from this question, what I'm going to do is jot down the 3 T accounts I think will be most beneficial in helping me solve this question. I'm first starting with inventory, so I can calculate my cost of goods sold, which cost of goods sold times 1.5 will get me my initial sales on credit, which will increase that accounts receivable, and then of course the balance in my AR and my AFTA account will solve for my net accounts receivable. So now that I have my T accounts down, I'm going to go ahead and look at all of the information I have and then record that into these T accounts. So starting off, this company is in its first year of operations, and that's significant because it means that all of the beginning balances in these accounts will be zero. Next, moving on to my inventory, I had purchases of $950 to increase that account. My ending inventory was $270. And if I had no write-offs in the period, then the only thing decreasing this inventory would be my cost of goods sold, which will solve to be $680. Since I know the amount of my sales will be equal to my cost of goods sold times 1.5, and that all my sales are on credit, that means my increase to accounts receivable in year one is $10,020. Recognizing bad debt expense of $100 will result in a journal entry that also credits my allowance for doubtful accounts, increasing that contra account, and my write-offs will decrease my allowance account as well as decrease my accounts receivable account. This write-off will actually have a zero net impact to my net accounts receivable. Lastly, my cash collections were $710, so I'll fill that in and then calculate the ending balances in my AR and AFTA account. The ending balance of my accounts receivable now is $260, and the ending balance in my AFTA account is $50. Since my actual goal in this question is to solve for my net accounts receivable ending balance for my first year, I know that I'll net these two accounts together. So my AR again is $260, and the balance in my AFTA account is $50. Since AFTA is a contra account to accounts receivable, my net accounts receivable will be $260 minus $50 to get an answer of $210. Now, this question was pretty involved. However, you did have all of the necessary information to be able to solve for the answer to this question, and hopefully being able to walk through it will better allow you to see how all of these accounts are really interrelated in the accounting process. So hopefully you found this helpful. Thanks for watching.